Trade tensions have intensified global uncertainty. The U.S. raised tariffs by 25% on imports from Canada and Mexico, plus an additional 10% on Chinese goods, totaling a 20 percentage point increase since President Trump took office. Markets reacted sharply. The S&P 500 endured its worst quarter since 2022, and volatility rose 28%. Goldman Sachs expects 3 Federal Reserve rate cuts this year to mitigate recession risks. In United States, the new tariffs pushed inflation to 2.8%, core PCE, and consumer sentiment weakened. GDP could contract by 2.8%, GDPNow, suggesting stagflation risks. Eurozone is concerned about manufacturing slowdowns. The EU introduced ReArm Europe, a EUR 150 billion defense spending initiative. The ECB cut interest rates by 25 basis points to counter mounting global pressures. In China, despite a 5% growth target and a 4% budget deficit, the highest in decades, slower real estate markets and U.S. tariffs weigh on Chinese exports. In the United Kingdom, UK firms plan USD 650 billion for reshoring and nearshoring to stabilize supply chains. A £9 billion Lower Thames Crossing project aims to bolster infrastructure amid global turbulence. Heightened volatility. Tariffs amplify uncertainty. Defensive sectors, utilities, consumer staples, healthcare, may fare better, while industrials face headwinds. Central bank response. Further rate cuts or liquidity injections are likely if economic risks persist. Fixed income assets could benefit, though inflation may erode real returns. Diversification. Geographic and sector diversification can help manage trade risk. Firms with robust domestic supply chains or strong pricing power may outperform. Supply chain shifts. Logistics, automation, and advanced manufacturing companies could benefit from reshoring trends if supported by policy incentives. A prolonged trade war could curb global growth by up to USD 1.4 trillion. While volatility and margin pressures may rise, improved policy clarity could spark a rebound. Close monitoring of inflation, central bank moves, and corporate resilience remains key for investors.